All right, ICT trader. I hope you guys are doing well. Okay, I just thought to quickly bring this to you. Um, I want to make this video to explain the correct way ICT view his order block. A lot of traders have gotten this wrongly. A lot of YouTubers, people have been saying order block is the last. Consider this as an order block. Consider last green candle before a break of structure, last red candle before a break of structure. No, I should say that is not his order block. Yeah, sometimes, most times they get the trading entry correct, and then basically because of one thing, and I'll tell you today, mostly that particular trade is returning to a fair value gap because after ICT explained his order block, it still leads to a fair value gap. All right, quickly. So I will be showing us an example of order block in this trade. This trade took place today, and I thought of showing you. Now, for you to identify an ICT order block, you will have to mark what we call your dealing range. ICT call a dealing range, okay? A dealing range. Let me just write it out. What a dealing range, so that you will know what I'm talking about. Dealing range, okay? Dealing range means that where you are working on currently, from this point here, you notice here, there is a sweep of liquidity below here. It's a sell side liquidity here. There's a sell side liquidity right here. Now, let me pick a cursor for you to see what I'm showing you. There's a sell side liquidity around here. And market came up after taking this liquidity here. It went up again to sweep the liquidity above here. There's a liquidity above here. There's a buy side liquidity here. Buy side liquidity. Okay, now what am I trying to show you? I'm trying to show you how to identify a dealing range. There's also a buy side liquidity around here, buy side liquidity around here. So when price has taken a downside liquidity, sell side liquidity, taking sell side, buy side liquidity, then you are in to short the market. All right. So our dealing range is right here. See, I've marked it. I marked it from the iPhone. Okay, pick your Fibonacci tool here. Pick your fib tool, mark the last load here down to your high, okay? So you know liquidity has been taken already. So the next step you will take is look at the recent up close candle, not really the last. It's not the last candle. Look at this up close candle here. Look at this up close candle. Okay? So this up close candle here. This up close candle here. The opening price, all right? The opening price is right here. I want you to check this place. Check, just put your eyes here when I put my cursor here. If you check this, what's the opening price of this candle here? Let me expand it for you to see clearly for you to know what ICT actually calls another block. What's opening price here? What's opening price? Okay, the opening price here shows 1.08801, all right? Okay, that's the opening price. So price after this up close candle, price consolidated a little bit and crashed down. You can see I mark this as market structure shift. Why? Because it closed below this other block. All this is a one whole hell of other block. These two green candles here are the other blocks, not this one. No, 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 no. So after price broke this structure, look at this candle here. This particular candle, let's find out what is the high of this candle. The high of this candle is 1.08808. Look at the low. I mean, the opening price here says 1.08801. This one says, the high says 1.08808. Means that market tapped into it, into this other block here. See this? It tapped into the other block. All right. It tapped into this other block at this price here. It tapped into the other block at 1.08808. All right. Yeah, sorry about that. try to make this thing straight, okay? So this is where market tapped into this, you can see. So let's measure. So ICT actually said that if, as long as price didn't close above the 50%, okay, price starts moving from this place. I use my Fibonacci tool to measure. You can see still at 50% of this old order block. So the whole of this, from here to here is the other block. From here to here, all this up close candle before the down movement is the other block. So you can also call it state in the change of delivery. Change in the state of delivery. Actually, change in state of delivery is when this particular candle hits exactly or very close to the opening price of this candle. But for this, you can also call this change in the state of delivery. Change in the state of delivery. Change like CISD. Change in state of delivery. That's exactly what I'm talking about. Change in state of delivery. Okay. Change in state of delivery. So let me take this out. So this is your entry, guys. So this is the entry to this. So this is the other block. All right. This is the other block. This is the other block. After liquidity has been swept above the Asia, this is your other block. This up close candle. See your entry. So if you call this another block, so now mostly people call this another block. A lot of people call this an other block because now if you set a trade here, you notice that price will never get there. But most people decide, since it's another block, most people decide to use the fair value gap that was created here as an entry. Look at this fair value gap here. See this fair value gap? So most people enter using this fair value gap to enter the trade. However, they never understood what another block is. So if I don't want to trade a fair value gap, that means I've missed this trade here. I've missed this trade. But this is real other block. These two up close candle is the other block. So price moved down to this point. It moved down to this point and was targeting. Now, another thing I'm going to be showing you is that if you enter your trade from this point, where is going to be your exit? A lot of us are having issues with exiting the trade. Look at it. Short this trade from here, okay? And ICT said you can put your stop loss above, just shortly above the other block, okay? Because of the wicks actually, so that the wicks does not do a damage to your trade. So look at this. Now, market, if you look at, we have some old fair value gaps here. This fair value gap, market still passed it, and went straight to this particular fair value gap, and also an unmitigated order block. Let me show you why this is an unmitigated order block. Look at this down close candle before the close above. See, this down close candle here, all these down close candle, 1, 2, 3, 4, is an unmitigated order block. See that? So market close is a break of structure to the upside, BOS. It's a break of structure to the upside. Then wait for price to return to where? To the opening price. From the opening price down, the opening price of this candle is where? The opening price is, I need you to look at this point here. Let's put my candle at the opening price. The opening price is 1.08542, 1.08542. Now let's go back to this trade here. Let's go back. Where is it? Let's go back to the candle that actually mitigated. This one, 1.08. That's the opening price was 1.08542, while this candle is the low of this candle is 1.08541. You can see that it went lower. So it went lower and mitigate this fair value gap. This other block. See, this line is the other block. This line is the other block. And at the same time, there is a fair value gap here. You can see there is a fair value gap. So if in case you want to be very aggressive, that trade you enter there, you can take your profit right here. Take your profit right here. Okay. Exit the trade right there because it's still within your dealing range. Let me show you. It's still within your dealing range. See that? It's within your dealing range. From this point, okay, no, it's actually past your dealing range, but your dealing, this is your liquidity. This is the next liquidity that the market is going to be targeting because it has delivered price to the downside, delivered down price. Market delivered price to the downside, went up to deliver price to the buy side, okay, and gave you an entry here. So the next liquidity that will be targeted is going to be here. This one. Let me take this off. Okay. The next liquidity that we targeted will be this place. Okay. And price actually took it. But the point is that how far will this liquidity go? You can take here, you can take here, you can take here. All right. You can just be moving your stop losses depending. So when price took here, all right, that's the first example of ICT order block. I just want to show you the first example of ICT order block and then the entry. So you can see there are two confluence to this entry here, the order block opening price, and then there's a fair value gap right here. So anyone you enter through. Then look at this. When price got to this place, okay, price got to this point here, and we're looking for entry around here. All right, look at this. Look at this down close candle here because this is not another block because the price couldn't close above it. Now, before I give this as an example, before I point the other block here, I want to really show you another thing for you to another proof of ICT order block. You can't just keep close calling every green candle, blue candle, order block anywhere you go. They must be at a very specific located level. What are these levels? From discount to equilibrium or from premium to equilibrium of your dealing range. Now, let me mark my dealing range again. Let me mark my dealing range again. Okay. See, this is my dealing range. From here, I pick this. I pick this. You can see that this order block here is exactly at the extreme of my discount. So this can be qualified as another block. All right, an entry here. Okay, see the entry, it goes up, crash down, then your entry, take your profit at where? Now, your order, this can also, okay, it consolidated at equilibrium. All right, if there's any fair value gap, if there's any inefficiency at equilibrium, you take partials. Or you target the next liquidity sweep, sell side liquidity. Now look at this. So you can see that market got to this point. It got to the discount. You can see market got to discount here. All right. Market got to discount. See that? Can you see that? I wanted to watch something very carefully. I told you where you identify ICT order blocks. Guys, I need you to subscribe to this channel. I'm not saying subscribe. Just once I'm going to say subscribe, like this video, recommend to somebody. You know, you begin to understand how price is delivered. See, the algorithm of this market is actually designed to locate these things. There's nothing like support, there's nothing like resistance. Support and resistance is merely an English word. The only thing that supports price is simply the ICT institutional reference point, which are other blocks, breakout blocks, fair value gaps, and other ICT institutional reference point. If you want me to talk more on this institutional reference point, just put down in the comment section below. And in case you don't understand anything of what I'm saying, because I want to try and make this video very short, so I'm very fast in my talking. You can pause it and watch it over and over again for you to get every highlight of what I'm saying. So I said you identify ICT order blocks basically from discount of your trading, your dealing range. You see, this is your discount, all right? This is your discount of your dealing range, okay? This point here, this is your discount to your equilibrium. So anything you see, now, if you notice this place, okay, if you notice this down close candle here, see, look at this down close candle, and look, there's a close above it. See, there's a close above this down close candle here. Look at the close here. It closed above it. Can you see that? The equilibrium, 50%. 50% of the order block, the down close candle. The whole of this place, I call them order blocks. 50% of it. Price touch the 50% and what? Boom, up. See that? See that? See how it went? Price pushed it up. When we got to equilibrium again, look up, look at it. Look at this. Down close candle. Look at this down close candle. Can you see that? That is the ICT real order block. Check, don't take my word for it. Don't take my word. Just go through your chart and see. See another set of down close candle. You can't say this is the order. You can't say this last one is the order block. No, 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 no. The whole of these are referred to as one held close candle. Down close candle. See that? Why? Because we're at equilibrium. It's permissible. Equilibrium. You can see that price close above it. See price close above this opening price. And see when price came, entered the 50%. Let's mark this out, okay? Let's mark the 50%. This is the 50% of this will be here. You can see, okay? You can see 50%. Price never closed below the 50%. Price closed above. Boom. It gave you your entry, all right? At 50%. Now, don't just mark any 50%. Don't just mark any. You have to mark your dealing range. You see, I'm operating at the level of my dealing range. I am not just marking or showing you any down close candle won't give you. It's not another block. Okay. So after the equilibrium, if you get to this point and you see a down close candle, it will not work. It's no more another block. Okay. It's no more. You can see from this place, price never gave you any entry at this point. See this one? Price never gave you entry until it swept liquidity and stopped at premium. You can see after premium, it delivered price to the downside again. After delivering price to the upside here, after taking liquidity, it started delivering price to the upside, to the buy side liquidity. It delivered price, and go to this point. It's now ready to deliver price to the downside. It gave you an up-close candle, close below it, your entry, boom. You get it here. When you get to equilibrium, let's see if we can identify any other block here, any other block here, any other block, any down close candle. Can you identify any down close candle here? Pause the video and see if you can identify any down close candle. Yes, there's a down close candle at equilibrium. Down close candle. You see this down close candle? It moved like this. Okay, can you see that? There's a close below it. If there is no close below this down close candle, then it is not another block. Now, look at this one. This is your other block here. There is a breakout structure below this other block here. You can see that? You can see this, close here. Then look at this one, it broke here. Now you'll be saying, I thought you said it's not the last candle. I am not saying it could be the last candle, but most people ignore the main order block and focus on the last candle that printed. I need you to watch this video and understand very well. Ask me a question in the comment section, please. You see this one cannot be called another block because there is no close below it. You see, you can see this, it went up, and then before there's a close below it. Well, okay, yes, yes. It went up, and then which one was the last one? This is the last down close candle. This one here, it went down below it. The whole of this is consolidation, actually. The whole of this point here, this is ICT consolidation. Sorry, please. ICT consolidation. You can see that it consolidated all the way. It consolidated here. Okay, it consolidated here. Consolidated here. So a break out of the consolidation. This is the break out of the consolidation. The whole of this point here, the whole of this consolidation can be seen as, so this one can be qualified as another block. This one can be qualified as another block. So when there is a break below this consolidation, price will turn back to it. You can see this point, the middle 50%. ICT said mark the whole consolidation and target the middle, the whole consolidation. Price started consolidating from here down to the 50%. Let me see it. 50%, guys. 50%. Yeah. 50%. Sorry, my 50 is misbehaving. All right. 50%. You can see that. So price entered the 50%. You can see price entered 50% of this consolidation here. This is a consolidation. This is another entry entirely. Okay. So the smart money are coming back to a price and order block here. So you see 50% of this down close candle, 50% of this one. All right. So after price entered this particular consolidation 50%, then there's an entry here. See that? It closed down until it got here. Now, finally, I'm going to be identifying another order block here. After price hits this old order block that I showed you earlier on, see that there's a down close candle here. Price went up, it didn't break above it. It printed another order block until price broke above it. You see, it closed above this particular one and keep going. Price never came back. Remember, price never came back. All right, price never came back to this OB. You can see that price went up, 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 up. Remember, there's a BC, there's a CB here, sell side imbalance, buy side efficiency. Sell side imbalance, buy side efficiency. The CB here, you can see that price closed below consequence encroachment, meaning that, guys, I have a business to fulfill here. I have a business to fulfill here. There's another block I need to mitigate. So price keep coming, came, did these things, fulfill this, fill this particular fair value gap, so that it does not leave any stone unturned. It came down. Look at the reaction. Look at this first candle here. Look at this first candle. It tapped into this other block. Can you see that? It tapped into it. It tapped into this first time. 1, 2. And remember, there's a gap here. There's a gap here. The 50% of this week and 50% of this week, ICTC treat this as a fair value gap. There's a gap here. You can see that price never closed below this gap and below this other block. See that? See that? The price went up again. You see that? So this is just what I want to show you, understanding the ICT order block. So watch this video over and over again. Ask me any questions you want to ask me. And there are a lot of things I want to expose you to. All right. So this is a new channel actually. I'm going to be dropping my Telegram channel, Telegram link. Okay, you can join the channel. Let's join the move. There are other group of traders that are there. Although it's new, share your experience, share your analysis. People will talk, guys with like mind, traders with like minds will discuss, will scrutinize. Send your trade setup. This is what you're thinking about the market. Send your take profit. I will be very, very happy with you. And okay, so I just thought of showing you this. There are tons of examples. Just go to your chart and experiment what I just told you. Don't forget, before you can begin to mark your order block, like I said, series of down close candle or series of up close candle, you must mark your dealing range, right? So this is the current place, this is the current point where price is right now. And this middle here is a consequent encroachment of this candle. So I am hoping that actually speculating that this particular fair value gap, which was a full fair value gap, will serve as a what do I call it now, as an inverted inversion fair value gap. All right. So do have a wonderful time trading. I wish you all the best. Bye.